please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
The market the last week had a decent Monday. This compared to its Asian pair at least. So the Shanghai, the Kospi and the Nikkei fell almost 2% each by the end of the day. So you can see the Shanghai down by 2.5%, Kospi and Nikkei also down by about 2.3%. Now back home, a late rally meant that the Nifty and the Sensex ended with cuts of only 0.5%. So the midcaps and the banking index more or less followed suit. Let's bring in Anuj Singhal for perspective on this. Anuj, the bulls woke up in the last hour of trade only.
Interesting day of trade. The market's been volatile but largely down. Intraday there was some rally, especially post 1 o'clock, led by a couple of banks, PSU banks in particular. Infosys, of course, batted the bulls for a part of the day, but mid-caps have been weak. Today what was interesting was that some of the erstwhile outperformers started to fall. HDFC Bank, Reliance, these two names really stand out. Larsen & Toubro also dragged the markets. NTPC, Bharti, Airtel, ONGC were all down. On the gaining side, had names like Infosys, Titan and Asian Paints. In the F&O space, you had some big losers like P18, JSPL, Shrey Infra, Adani Enterprises, Reliance Capital, and Just Dial. While on the gaining side, you had names like CG Power, Balkrishna Industries, and Punjab National Bank. All in all, still a weak day, and now both local and global cues are hurting the market. Let's see if we can protect, or the Nifty can protect, the 10,590 sort of low, which really has been crucial. We'll find out, of course, tomorrow onwards.
Okay, Anuj, thanks for taking us through that. Of course, some kind of pressure coming in from global markets. So let's understand why. The European Union and the United States continue to trade blows over trade tariffs. Overnight, US President Donald Trump told Fox News that the European Union, in treating the US as badly as China, is only on a smaller level. The comments seem to suggest that the US may impose further tariffs on cars imports from the EU. In response, the EU has threatened to retaliate with tariffs on up to $300 billion worth of US products if car makers are penalized. CNBC's Martin Soong filed this detailed report.
Tariff salvos being fired across the world. Canada's more than $12.5 billion worth of retaliatory tariffs on U.S. products now in effect, including on U.S. steel, aluminum, plus whiskey, lawnmowers, yogurt, ketchup, and of course the all-important maple syrup. Meantime, China cut tariffs on imported cars Sunday to 15% versus 25% before, but it is expected to slap an extra 25% of tariffs on U.S. auto imports this Friday, along with on a clutch of other goods from America worth a total of $34 billion. Now that is in response to U.S. tariffs of 25% on the same value of Chinese imports also going into effect that same day, that is this Friday. Meantime, across in Europe, the EU with a stark warning for Donald Trump. The FT reporting Trump's threat to slap tariffs on auto imports could trigger global retaliation of as much as $300 billion worth of U.S. goods. The U.S. Commerce Department launching a Section 232 investigation in May into whether foreign autos and auto parts pose a national security risk. Trump, though, still sounding just as defiant as ever, rather, over the weekend. Take a listen.
The European Union is possibly as bad as China, just smaller. Okay? It's terrible what they do to us. European Union, take a look at the car situation. They send the Mercedes in. We can't send our cars in. Look what they do to our farmers. They don't want our farm products. Now, in all fairness, they have their farmers, so they want to protect their farmers. But we don't protect ours, and they protect theirs.
And meanwhile, trade tariff concerns have taken a toll on investor sentiment across the globe. So markets in Europe, for instance, are trading sharply lower at this point in time. So the German DAX is down by about 0.5%, British FTSE down by almost 1%, and the French CAC over 1% in the red. Now, in Germany, the Interior Minister and leader of Chancellor Angela Merkel's coalition partner has offered to quit, putting the fragile coalition government at risk. Market players are also concerned about the Euro area manufacturing PMI, which fell to an 18-month low in June, owing to concerns over growing trade barriers. So that's as far as the global market is concerned. But moving on, the government is in final stages of talks regarding the creation of an asset manager to deal with stressed assets of PSU banks. That's the big story back home. Interim Finance Minister Piyush Goyal held a meeting today with top PSU bankers, including the SBI Chairman Rajneesh Kumar. The meeting was called to finalize the action plan based on the report submitted by the Sunil Mehta panel. Now, remember, last week, sources said that the government is keen on an AMC and not an ARC. This is exactly what SBI Chairman Rajneesh Kumar had told Shireen Bhan in an exclusive interaction on the 20th of June. Speaking in detail about the concept of an AMC, the SBI Chairman had said that there's definitely a need for a strong agency to manage any assets that banks decide to take off their books.
The situation today is that there are a couple of ARCs, and it's also not about setting up a new ARC. But there are various models available where it is being felt that we definitely need a strong EMC. The government is only acting as a facilitator in the whole thing. That also I need to clarify. It would be a collective wisdom and effort of all the banks. And as I said, that no new legislation will be required. Probably no new guidelines will also be required. So it will be all within the existing framework. I think it can be done very fast because there may be there are various options again. So it can be very fast. But when do we see the first asset being transferred to the new AMC? So it may take minimum 3 to 6 months.
Welcome back. Let's get to the big exclusivity of the day. An announcement on new minimum support price for kharif crops can be expected anytime this week or the next. Now, this is the word coming in from Rajiv Kumar, the Vice Chairman of the government think tank, the Niti Aayog. Now, Kumar, in a freewheeling conversation with Shireen Bhan, asserted that the government's objective when it came to the new MSP was to minimize fiscal burden while ensuring that farmers get the best deal. That's not all. Rajiv Kumar also gave his views on a CNBC TV18 news break that the state-run LIC was looking at picking up a majority stake in IDBI Bank. Kumar said that while acquiring stake in cash-strapped IDBI Bank was a call that only LIC's board could take, he did not feel that there was a problem with the deal as long as corporate governance norms were followed. He in fact went ahead and added that in hindsight, LIC's bet on IDBI Bank may turn out to be a good one.
Well, there are two separate parts here, points here. One is the announcement of the MSP itself, and I think that's about you should see that announcement within this week or the next week. I think those numbers and those estimates being done by the CACP, the Commission on Agricultural Costs and Prices, I think are ready and they would be announced. I suppose, as always, they are doing a final check on how the in terms of the whole. So that's first point, and I think there should not be much delay in that announcement. The second aspect, of course, is the government's own schemes for procuring at that MSP, because now the government has announced its intention very clearly in the budget that they will cover all 70 crops, not 23 crops under the MSP formula, and therefore the Niti Aayog had proposed 3 alternatives to that, and those have yet to be discussed in some detail, and I know that these discussions are
but it's been a while since the budget, Mr. Kumar. So that's what I'm trying to understand. Why is it taking so long? I'm also given to understand that perhaps the Finance Ministry has raised some concerns on the fiscal impact of the new MSP formula that the Niti had suggested, the 3 proposals that you had put forward. So has there been a revision that the Niti or the Agriculture Ministry has made post the Finance Ministry's feedback?
Yeah, if you had read it carefully, Shireen, the objections from the Finance Ministry, which I haven't seen formally, but I've read in the press, are about the 2 formulas that have been proposed, because the third actually wasn't discussed in some sense, and this is what so the Finance Ministry's own concerns, genuine concerns, plus the fact of some of the states wanting to have their views heard about the 3 different schemes is what is causing some complexity. It is a very complex situation, because and what we are trying to do from Niti is to re-look at all the 3 and figure out as to how we can minimize the fiscal burden while getting the best deal to the farmers. But the most important thing here is that the government is committed to giving the farmers the best deal possible, so that any complaint about procurement being less than what is needed or warranted shouldn't be there.
So how much longer, Mr. Kumar, before we actually see a decision and clarity on the new MSP regime? And ballpark, we are given to understand that the proposal that was sent to the Finance Ministry would have in fact meant an outgo of about 25 to 30,000 crore rupees. That was the ballpark that we were given to understand. Is that accurate?
I am not sure of that. I am not sure of that number. And to predicting how long anything will take in a government is like predicting the World Cup soccer World Cup results. So I'm not going to hazard that. Yeah.
Okay.
So, but I think it will be out soon.
You know, there has been a fair amount of criticism that why is the government pressing ahead with LIC picking up IDBI Bank? We are given to understand that there were perhaps at least, you know, 2 interested private sector players, but the government has chosen to go the LIC route. Why should the government saddle LIC with IDBI Bank that's saddled with a mountain of NPAs at this point in time is the question that most people are asking.
Well, I mean, I don't know whether you're right in saying that the government has posed the LIC. LIC, I suppose, has an independent board, and it's probably a board decision of the LIC. But even if I accept the fact that the government may have, you know, may have in some sense nudged the LIC to do so, I don't see any issues in that. Because if there is surplus cash available in one of the government corporations, which can be put to good use, if and if only the IDBI management is changed, and if only we have made sure that the governance, the corporate governance has been put on the right track, then we should be doing this. Because I think this is a question of, you know, one company making a sort of a reasoned investment decision in the hope that it will make money going forward. Now I believe that the chairman and managing director of the IDBI has now been appointed.
Yeah.
He's somebody who's very, who's a wonderful, I know he's one of the best professionals in the, I think it's Sriram,
yes.
Mr. Sriram,
yes.
Whom I've known in the SBI when I was on the board. And I think under his leadership, you will find IDBI, you know, sort of, IDBI recovering and, you know, and being put on the right track. And therefore, for all you know, just like Barack Obama did with his banks, LIC may have made a very good bet.
All right, that is the rationale by Niti Aayog on why the LIC deal makes sense for IDBI Bank. Let's move on now. After months of negotiations, Tata Steel and ThyssenKrupp Group have reached a definitive agreement to create Europe's largest steel company. Now, the JV will be called ThyssenKrupp Tata Steel and will have a combined sale value of about 17 billion euros. Nigel D'Souza joins in now with the fine print of the deal. Nigel, of course, this was in the making for a long time. Take us to the contours and views of various brokerages on the deal.
Well, that's right. Tata Steel and ThyssenKrupp, they've gone ahead and they've signed a definitive agreement for that promised joint venture. The Memorandum of Understanding was signed way back in September 2017. So this was a step in the right direction. The fear on the street was whether or not they'll transfer that 2.5 billion euros of debt to the joint venture. Now that's happened, so that fear really was taken care of. What has changed? If they go for an IPO, Thyssen has the right in terms of the timing of the IPO, and they'll also have a higher equity stake. So they'll have nearly around 55% stake now. Earlier, they had around 50% stake. Now it's come down to 55% to Thyssen and 45% to Tata Steel. What do they throw up in terms of revenues? Well, it'll be roughly around 17 billion euros approximately. And EBITDA, currently they're doing around 1.5 billion euros or thereabouts. Add to that another 5 million euros. So together, the EBITDA that they'll be able to generate is around 2 billion euros. The timing for this transaction to close out is in this fiscal year itself. Finally, brokerages, they like it. CS as well as CLSA, they view this as a positive, while other brokerages like Jefferies as well as Investec, they are worried if in case the debt burden does shoot up for the company.
On Saturday, we signed a definitive agreement to bring our European steel operations together between our two historic companies. Our two companies emanate from the heartlands of the European steel production with significant operations in 3 European countries. And we are very glad to assemble here in Brussels today because Brussels is the capital of the European Union, and we wanted to express our strong commitment to the idea of the European Union.
And here's the other big story from the metal space. Vedanta was also an important stock in focus today. The stock soared in trade on the news that the company plans to delist from the London Stock Exchange. Reports, in fact, suggest that Vedanta chairman Al Agarwal's family trust has agreed to buy out minority investors. And as a result of that, there has been surge in the share price. That stock is the price of the delisting is in fact a 28% premium to the current market price. We will take a very short break on that note. Up next, it's been a smooth ride for the auto sector as far as the June auto sales numbers are concerned. Details on the auto sales after the break. Stay tuned. Welcome back. You're watching After the Bell on CNBC TV18. Shifting focus to Motown now. Auto sales for the month of June topped expectations, with Bajaj Auto clocking the highest sales growth of about 65%, followed by Maruti Suzuki that reported 36% growth in sales. Sonia Shenoy is here with a wrap of the numbers. Sonia, looks good for the month of June on the whole. What is the reason for that? Is it seasonal growth that we saw?
Yes, it does actually. And in fact, you know, the best of the lot this time is Bajaj Auto, and that's why the stock is up and about quite a bit. So let me quickly run you through the numbers. This time, total sales growth of 65% for Bajaj Auto. It's really the exports that are firing quite a bit for Bajaj Auto. The management told us that not just traditional markets like Nigeria, but the newer markets like Ghana, Iraq, etc. are doing quite well. Even if you look at the motorcycle segment, it's a 65% growth. They did say that they've picked up motorcycle market share. So Bajaj Auto looking pretty good. Apart from that, if you look at Maruti, the numbers were pretty good given that they had 7 days of a maintenance shutdown. Despite that, they saw 36% growth at 1.45 lakh units. Yes, it was less than what they did in the last few months, but as I said, there was a shutdown, so you can't compare it month on month. For M&M, the auto sales look pretty good. 26% growth is what they've seen. Although their SUV or the utility vehicle segment has fallen a bit, the commercial vehicles have done pretty well, a growth of almost 27% there. Talking about commercial vehicles, even Tata Motors numbers were pretty good. Ashok Leyland did quite well. For Tata Motors, it was a 50% commercial vehicle growth. Passenger vehicle sales growth was up 63%, and these were higher than Nomura's expectations. Finally, Ashok Leyland, the total sales growth was 28% year-on-year. Medium and heavy commercial vehicles went up 22% and at 15,791, not only is it higher than the expectations that Nomura had of 13,900, it's higher than the last 2 months. So April and May, they did 12,000 and 13,000 respectively, and in June they did 15,791. So looking pretty good for the commercial vehicle sector.
Okay, Sonia, thanks for joining in with that. In fact, earlier today, we also caught up with Rajiv Bajaj, the MD of Bajaj Auto, who talked about the company's growth story and his expectations on the sales numbers going forward.
Nigeria has rewarded us with the highest growth in terms of motorcycle exports. For the first quarter last year, it was about 39,000 vehicles totally. This time it is 104,000 vehicles. So that's been outstanding. For now, I can only say that in the first quarter, we've recorded a 31% growth overall in exports at about 540,000 vehicles. This is our highest ever quarterly exports in the history of the company. If you were to simply extrapolate it, it suggests that we should be hitting something like 2 million at the end of the year.
All right, moving on. The National Stock Exchange today signed a pact with the American tech bourse Nasdaq to source technology for offering customized real-time clearing, risk management as well as settlement. Now, the latest agreement between the two means that the NSE will have a suitable platform and technology backbone to tap post-trade delivery capabilities. CNBC TV18's Prashant Nair caught up with the MD and CEO of NSE, Vikram Limai, and the President and Chief Executive Officer of Nasdaq, Adina Friedman, on the sidelines of the tie-up announcement. Here's an excerpt of that interview.
Could you just tell us about the agreement, the MOU, which has been signed today? I mean, what does it really do?
Well, it encompasses a few things. So the first thing is that we've been working with the NSE for over a year now to develop a partnership around the clearing settlement solution that you mentioned in risk management. So that is a signed agreement where we will provide our software into the Indian market. We'll work with the NSE IT team to customize the technology for the Indian markets that are specific to the Indian markets. And we'll work over the next two to 3 years to make sure we implement those successfully into the marketplace here as a replacement for the current NSE clearing and settlement solution. In terms of the broader partnership, though, we also have the opportunity now to work with the NSE IT team on their own delivery, but it allows us to also look at partnership opportunities to work with that team on expanding our own capabilities to deliver our technology around the world.
In terms of NSE, what does this MOU really mean for the NSE?
So it's a very important partnership because I believe that globally exchanges need to collaborate a lot more with each other. There's a lot to gain from collaboration in terms of making sure that You learn from the experiences of others and bring in best-in-class technologies and practices to the Indian market. So from our standpoint, we've been a leader in providing technology solutions to the Indian capital markets. All our systems today are in-house developed, including the trading system, the surveillance system, and the clearing and settlement system. We are committed to investing in technology because this is the exchange is about a technology platform. And so it's important to provide best-in-class technology to the Indian capital market. And as we look at investing in all parts of the value chain, we said that the clearing and settlement system that we want to develop, we would rather look at a global platform and then customize it for our domestic needs so that we are future ready in terms of not only the latest in technology that's available globally, but also the flexibility depending on how technology evolves going forward to be able to provide that to the Indian capital market. So whether it's blockchain, whether it's other aspects of evolution of technology, we need the flexibility to be able to provide that.
All right, moving on, here's the latest from PNB scam. The Interpol has issued a red notice against absconding diamond merchant Nirav Modi. It follows the request from Enforcement Directorate as well as the CBI or the Central Bureau of Investigation. Remember, Interpol has also issued notices against Nirav Modi's brother Nishal and his employee Subhash Parab. And with that, it's time to wrap up this edition of After the Bell. Stay tuned to CNBC TV18 Markets Today Talkback. We'll take the action forward on the other side of the short break.